Hi everyone, in this video we're going to cover the daily 1 hour and the 15-minute Elliott wave scenarios, and I want to tell you up front that this video is going to be very technical and theoretical, especially once we move into the 15-minute time frame. Usually in my content I try to keep it very simple, very understandable, and I only cover 1 or 2 scenarios per time frame depending on if I cover multiple time frames in one video, yes or no. Now in this particular video we will start with the daily time frame because it's just very important to know where we are and why it matters, because it has an impact on the 1 hour time frame scenarios I have here. But especially if we move into the 15, that is where the theory really kicks in. And if it is difficult to understand, then of course feel free to just skip towards other areas in the video. I have the timestamps in the video anyway, and of course the probabilities are at the end of the video, and there's also a timestamp, so if you just want to check the probabilities, that's absolutely fine. But the 15-minute time frame, we've been ranging sideways, and I think I can educate either beginning Elliott wave traders or maybe more experienced Elliott wave traders on how to analyze the structure to get to the highest probabilities from an Elliott wave point of view, even when it is quite messy. And that is exactly what the 15-minute is trying to be at the moment. So let's then start. Starting with the daily time frame, right? We've been covering this the past couple of days. We have the 1-2s here. We're looking for 4 and then a wave 5, still looking for all-time highs, taking out this high over here, right? Now a wave 4, the target area, the price target area has been touched. The blue box has been touched. This white area here has also been touched. Both of these are target areas for your wave 4. So that's all good. But from a time perspective, you can see that this structure here is very short and the low is made before the 1 to 1 fib time, comparing this wave 4 with wave 2 in white. Even if you would compare this range here with the blue 2, so if you want to count this 1, 2, 3, 4, 5 in blue, then also again this structure here is a lot shorter than your blue 2. Now most commonly a wave 4 is longer in time than a wave 2, so preferably you finish wave 4 after the 1 to 1, and this is something that we do have to keep in mind. The minimum time target for a wave 4 is reached, which was the 0.382, and we did make the low after the 0.382. It's just that from a probability standpoint, it's more common to have a wave 4 that's longer than a wave 2, right? It's not like an invalidation or confirmation because time never is. It's just a probabilities game, and that is what we try to determine. Now with this information in mind, right, we go to the 1 hour time frame. And on the 1 hour time frame, there is 2 scenarios I like to talk about. First of all, a flat. Now, this is a scenario where we have to count this move to the downside as a 3-wave in a wave A. A little bit tricky to count a very nice 3-waver in here. You could count this structure here as an expanding diagonal for then a wave A. This has to be a B and then a wave C, so a zigzag to the downside. Now this wave C internally, especially the ending, of course, looks a little bit awkward, as if we again have a bit of a diagonal going on here. It's definitely not an invalidation to have a diagonal in A and in C. It's just very rare to see that. Alternatively, you need to look into WXYs, but actually, without going in detail over here, we don't need that detail. We don't need to know exactly 3-wave, 5-wave, because what matters most is what is happening here. And that is also what this video mainly is going to zoom into. So we have this scenario here on the chart, right? So a 3-wave structure in a wave A, in one way, shape, or form, you'll be able to force a 3-wave structure in there. That's absolutely no problem. And then inside this wave B here, we look for a double zigzag. Being an ABC in wave W, you look for a 3-wave X and then a 3-wave move to the upside in a wave Y, which then finishes your blue wave B. Now the common target for B here is on the chart, which is the blue area, 102K to 103.4K. And in a double zigzag, preferably your wave X does not touch the 0.7 at 92.6K. It's not a hard invalidation, but it does significantly lower the probabilities, and the minimum target for a wave X is touched over here, which is the 0.382. Now what you can see on my chart though, and this is on purpose, is that this wave X is not positioned at this low here, nor is it positioned at this low here. And this is to do with the 15-minute time frame, and we'll get to that in a second, because preferably this wave X here is not yet finished in this particular scenario, as we would be looking for primarily a WXY or a bigger flat. More to come about that in a second, right? Now, after your B, you then look for a straight line down in C, should be an impulse, 5-wave structure, 1, 2, 3, 4, 5. Take out the low of your wave A. Right. Now, if I open some of the support and resistance areas, then you can see the main resistance to the upside, the blue box here, sits between 97.8 and 98.7K here. Then we have this white box, which has been touched once before, acting as resistance, which is the reason it's now white, as usually my boxes are blue. Once they are touched or passed, they turn white. But we do still have a daily naked point of control here at 99.4K, so just be aware of that level. And then here you see a couple of fibs. This is all-time highs, of course, but based on some Fibonacci pools, we can identify potential areas of resistance while price is in price discovery. And you can see the red box here in confluence with the flat wave B target. So at least it's something to be aware of. And then to the downside in C here, we have two areas, 89.4 and 90K. And then we also have 86.9 and 87.4K. Okay, so I think the flat is quite clear. It's a very interesting scenario from a psychology standpoint, but preferably your wave X here is not yet finished. Then we go to a zigzag, and here we count a 5-wave structure down, 1, 2, 3, 4, 5. One here is an expanding diagonal. Now, a 5-wave structure does look a bit nicer to the downside, but again, besides the move to the downside, this now has to be a 5-waver, and you look for a 3-wave structure in a wave B. And also here, you can see that at the moment, I do not position wave B at this high. Now, this is also partly because of the analysis of yesterday and the day before, where we said once we made this high, right, then price-wise, the retracement is high enough for a wave B. 618786, common target for B, perfectly fine. But time-wise, if this is the end of your B, that's a very short wave B, right? Your wave B is way shorter than the 0.382 of A, right? It's shorter than 38% of the time of A, which is simply not common according to probabilities, where ratio analysis in Elliott waves is very important. And ratio analysis is, of course, the ratios between the different waves. If A is a certain amount of time, preferably your B is a certain amount of time, and preferably B is longer than the 382. It's again not an invalidation, but we trade probabilities in the end. Now, what you see in B is that I have a white subdegree count. So you can see the move up labeled as then an A or a W, right? Either a 5 or a 3, doesn't matter. We're looking for a 3-wave structure in a B or X and then another C or Y. In this case, we then make B longer in time, right? We extend it in time, either as a complex WXY structure or a zigzag 5-3-5 structure in your wave B. And also here you can see that at the moment, I have B or X down here, not over here, right? That's the same as the flat structure. Now, after your B, you look for price to move down below the low of your wave A, while I get a Windows safety notification. Very nice. So that is the scenario, right? Now, your most bullish scenario, because these are actually both like bearish scenarios, right? We're looking for price to still move below 90.6K in both of these cases. The most bullish scenario is what you see on the chart here, which is an impulse. Now, mind you that this is then a finished 3-wave corrective structure for your daily wave 4, meaning this structure is the end and finished before the 1-to-1 fib time of wave 2. So 4 is now shorter than 2. It's not an invalidation, it happens, it's just probabilities. Also, this move to the upside is labeled as a wave 1, with a multi 1-2 to start it, 1-2, 1-2, 1-2, 3, and then there's a couple of 4-5s over here on the lower time frames, right, to finish a wave 1. It's not like an ideal impulse, but we can make it work, right? You can definitely see your 2s are actually quite clearly visible, but your force are like hidden inside the candles on the lower time frames, right? So here again, some of your twos are more like longer than your force. It's just not ideal, but we can make it work if we need to. And you will see at the end of the video, it's mainly also about the confluence between the different scenarios, right, and how they work together. I told you it was going to be technical, so if you're still here, you know, props. And you know, the most technical is still to come. So here we have our 1. We look for a wave 2. Minimum target for 2 is reached, right? The 0.382. Common target is the blue box here, 05786, 94K, 92.1K. Invalidation is the low at 90.6K. Also here, you can see that I put my 2 here. And that is more like preferred, but we can actually put wave 2 down here, which you will see on the 50-minute time frame, and count another 1 2 1 2, and then look for wave 3 up. I'll talk about this more in a second, right? So in an impulsive structure, there is at least a possibility to count a finish 2 on the 15-minute time frame and continue towards the upside. Very much depends on the move up here, if this is a straight line versus a 3-wave. More about that to come now that we're going to talk about the 50-minute time frame. And this is what we're going to talk about. All right, so the 15-minute time frame. I had a look this morning. Bit of a busy morning, but then eventually I started writing my post. This is in silver. I wrote to silver in the morning, and I'm not going to read everything, but it just shows like the amount of text that I basically use and all the pictures to explain some of what is happening here. So this is the range that we have been in, of course, since the high that was made on Wednesday, Central European time, right? And we've been basically moving sideways. You can see 3 counts. And this is what I said at the beginning of the video. Usually I only show one option, cover that option, why it's relevant, and we go to like another option or another time frame or the probabilities or whatever, right? But now there's 3 different counts on my chart. And I more actually now want to educate maybe some of you, the experienced counters will know how it works, but some of you on how do you analyze a range like this. And something that I like to do myself sometimes, which I do recommend, especially starting counters, is to just write the corrective structures on your chart. So we have, of course, zigzags, we have flats, we have triangles, and we have WXYs, right? And you're going to just go through these one by one. Now, the zigzag count that I have on my chart would have been the blue count. Now, mind you that when I wrote the update to silver a little bit earlier, we didn't yet have this move here to the upside, right? So just act like it's not there. So if we are looking at a zigzag to the downside, we need a 5 in A, a 3 in B, invalidation is this high, and then we need a 5-wave move down in C. Yeah. Now we need, first of all, a 5-waver in A. 1, 2, 3, 4, 5. Wave 4 here did touch the 618, but if we count this as a triangle, you might get away with it because if wave A of a triangle hits the 618, it's not as bad as the ending of a triangle hitting the 618, but that would be your like 5-wave count down. It's mainly your B and your C. Your B, if you end A here, needs to be a 3-wave structure, right? So you need a double zigzag, a WXY, but your X is very deep. It hit the 0.7 from the low to the high, which lowers the probabilities of a double zigzag. Now, Overset Tim in Discord said, well, you know, we can also have WXY, and then of course this is not counted as an impulse anymore. That's true because that's one of the scenarios still coming up. But we can't put wave A here in this case, right? Because then we have a 3-wave, not a 5-wave, and wave A in a zigzag is a 5-wave structure. So we need to end it here. Therefore, we need to have a WXY, right? Zigzag. You need to count this as some sort of a flat structure. There's not really any other great option. And then this is your X, this is your W, this is your Y, right? So you have zigzag, X, and then zigzag, but a very deep X. Alternatively, you could be, okay, how if we count this as an expanding diagonal, A, B, C, that's great, but you have one range, where's the other? Because if you have a wave C, you need a 5-wave structure, not a 3-wave structure. But this is very much a 3-wave, not a 5-wave. So therefore, if this turns into an ABC, you still need to take out the high after a range in 4 and 5, right? So you're still looking for price to take out this high then at some point, no? So this is a complication for the zigzag, and also local price action, this move down, was not a clear impulsive structure. Wave C has to be an impulse to the downside. So either a impulse 1, 2, 3, 4, 5, a diagonal structure 1, 2, 3, 4, 5 correction continuation, or a multi 1, 2, 1, 2, 1, 2, 1, 2, and then eventually you just drop to the downside in a bigger wave 3. However, this move here did not show any of those opportunities with high probabilities. You may have seen it in Discord already if you stopped the video earlier on what I wrote about this structure. But if you want to count this as an impulse to the downside, right? Let me remove the blue line for a second. You need a 5-wave structure, 1, 2, 3, 4, 5. Well, then we don't finish it down here. Plus we have overlap, which isn't allowed in an impulse, right? So that doesn't really work. And if we do want to end a structure here in a 1, 2, 3, 4, 5, then it's going to be an expanding diagonal, which is very rare, never preferred unless everything else fails. And this then needs to be a flat ABC, but your wave B is very deep. So you have an expanding diagonal, very rare, plus a wave B that exceeded its usually maximum target being the 1.618. So you have low probabilities of an expanding diagonal plus low probabilities of a B actually going that deep, which doesn't help. Alternatively, you would need to think about a 3-wave structure in a wave 1 here. This is then your 2, some sort of 3-wave in a 3. This is your 4, and then this is your 5, right, with another 3-wave to the downside, which means that now you look at a diagonal like this, but it's still an expanding diagonal, still very rare. And your wave 3 here is the shortest structure, way shorter than your wave 5, right? And also 3 is shorter than a wave 1. According to the new rules, it's not necessarily a full invalidation, but it doesn't help, right? And an expanding diagonal is already rare. So counting a structure down here, not great. The only opportunity you really had was a multi 1, 2, right? 1, 2, 1, 2, 1, 2, maybe another 1, 2, as you know what I mean. But the moment price started to move up here, we had some bullish CVDs. I'll show it in a second. Some bullish CVDs coming as price moved up as well. The moment you start to move up here, right? Once you hit the 886, taken from this high to this low, a 1, 2, the final 1, 2, very, very low probabilities, right? So eventually we touched the 886. And this, in a multi 1, 2, this needed to be another 1, 2. But the moment a 2 hits the 886, low probabilities for 2, right? So then a multi 1, 2, and if you pass this, it's invalidated, which we did soon after. It's just that the probabilities go down. And you can also use things like time and, of course, CVD divergences to check different things. Now, time-wise, if we were looking for another wave 1 and another wave 2, it's okay, right? And if we then look at the CVD divergences, you can, over here, we had bullish CVDs over here. These ones played out, actually not clearly visible, but if you see the red line, this red candle, and then we have over here the green candles, higher low in price, lower low in yellow. So you had some bullish CVDs building as price moves up. And then once you hit the 886, that's most important. It invalidates a multi 1, 2 as well, which was, or not invalidate. Once you take the high, it's invalidated. 886 just lowers the probabilities. So therefore, it lowers the probabilities of this being an impulsive structure, lowers probabilities of the bigger zigzag, right? If we zoom out to the 50-minute time frame, and that increases probabilities this is corrective in an a WXY, a double zigzag, and for price to take the high. Okay, very technical. So that is your zigzag story, right? So that is the blue line. Now then we have, of course, flat triangles, WXYs. And if you actually, let me say this first, if you pay attention, I don't have a triangle on my chart because it doesn't make sense. So we can kind of already remove this, because a triangle, this is a long video, a triangle would then be a wave A, a wave B, you need a C, D, E. Now, first of all, triangle, generally, it doesn't really make any sense to put a triangle on a chart before wave D is in. And also your wave A, right, by far most common is a simple zigzag ABC, right? We can count this as an ABC. Okay, A, B, 1, 2, 3, 4, 5 in C, cool. But then our wave B needs to be a complex structure. And if one of the waves in a triangle, because 4 out of 5 waves needs to be a simple zigzag. If one of the waves is not a simple zigzag, but a double or triple zigzag, it is by far most commonly wave C. If not C, then D. If not D, then maybe B, right? For D, it's already uncommon. For B, it's very rare. And A and E are like almost unheard of. In this case, your B would be a complex structure, so it's just low probabilities to think about triangles. So it doesn't really make sense to put on the chart, at least as long as a wave D is not in, right? So your zigzag doesn't really work anymore. Your triangle is out. So that then leaves you with a flat and a WXY. But in both of these cases, you're actually taking out this high here. So if we now go to the flat first, which is the yellow line on my chart, then here we have our wave A, wave B, wave C. Now in this particular case, our wave A is then labeled as a 3-wave structure, and we have to finish it at this low. There's not really another option for a flat, right? Because of this move up. If we finish wave A here, then this is a 3, 3, and then a 3, right? W, X, Y, double zigzag. X hits the 0.7, low probabilities, right? It's not what we want to see. And if we want to make it to the wave B target area, which starts at the 0.9, we need another zigzag, meaning W, X, Y, X, Z. And the W, X, Y, X, Z is incredibly rare, never preferred unless everything else fails, plus your first X hits the 0.7, which already impacts probabilities negatively. So therefore, we need to finish our wave A at this low here, and then a W, X, Y double zigzag here, where your wave Y did take the low of your W, but not of X, right? Happens, but that's just the way you have to count it. There's not really another option. Then we have our wave B. Now, as mentioned, we need to take out this high to reach the minimum target of B. Therefore, we have to think about a multi-zigzag, which is also most common in B. A zigzag family structure, simple, double, triple, not much, of course, not so much, but a single or a double zigzag. In this case, the first one is finished. So you look for a W, you look for an X, and then eventually a Y. Now this means, and this is the difference with the bullish scenario, which is coming up later, this means that this move up has to be a 3-wave structure. An A, a B, and a C. Not a straight line to the upside to reach the wave B target. It needs to be a 3-wave structure, not a 5-wave structure. So that is a very, very important difference. Now, if I take the Fibonacci from the start to the end of A and toggle on the target for your B, then you can see that the target for B, which is the blue fibs here, is in confluence with the resistance box that we have above us, as explained earlier, between 97.8 and 98.7K. Right, so that is an important resistance area also with regards to this scenario, right? So it's a bit of confluence between the Elliott wave scenario and the box here on the chart. Now, after wave B, we then look for a 5-wave C to the downside. But the most important thing of this whole scenario is that you need a 3-wave structure up, not a 5-wave structure to the upside. So you want to see 1 to 1, I think lower time frames here. You can count 5 min, right? Potentially 1, 2, 1, 2, and then 3, 4, 5, 4, 5. Eventually, you want to end an impulse. I never really go to the 5 min, but you need to end something, see a retracement, and then go back up again. And then finally, we go to a WXY. And a WXY is a sideways, a complex structure, where we have a three-wave in W, any corrective structure in X, right? W can only be a zigzag or a flat, but it has to be a zigzag. Over here can't be anything else. Then X can be anything, and wave Y can be a zigzag, a flat, or a triangle. But if wave W is already a zigzag, which it is because it can't be a flat, then wave Y in a sideways double combo can't be a zigzag structure. And a double zigzag, which is zigzag W, X, and zigzag Y, so that is a sharp WXY, big difference. Sideways WXY, W and Y need to be different. If W is a zigzag, Y can't be a zigzag, right? In a double zigzag, which is a sharp correction, you can or you must have W and Y both being a zigzag. But the moment you touch the 0.7, right, Fibonacci, there we go. If you touch the 0.7, even if it doesn't really matter, even if I take it over here, we touched it, right? And the 0.7 lowers the probabilities for a double zigzag. So the moment your X hits the 0.7, you got to think about a sideways double combo, which increases in probabilities compared to a sharp zigzag to the downside, because X in a sideways WXY likes to retrace to a higher level, right? So, okay, cool. We have our W. We have our X, and then we are looking for Y. Now, in this particular case, like Overset Tim said in Discord in the gold chat earlier, gold membership area, hey, I can count a potential zigzag here, then have a W flat, X double zigzag, Y double zigzag, for then another complex WXY in X, right? Works perfectly fine. You can end your W here and then count WXY, right? Alternatively, you end it here. Doesn't really matter, because what matters is your wave Y. Your wave Y needs to be a triangle or a flat. Now again, a triangle only really makes sense if a wave D is in, A, B, C, D, and then eventually E, and you continue to the upside. But it's too early to talk about that stuff. Plus, based on the local structure, your wave A needs to be a simple zigzag, right? Preferably, by far most commonly, very, very rare for it not to be. But this counts best as a double zigzag, not a simple zigzag, which kind of throws a triangle out the window, leaving you with a flat structure in a wave Y. Which therefore again means you take out this high, because Elliott waves gives you a directional bias, right? That's what it does. And in this case, you can see the directional bias based on the 15 minutes is actually taking out this high as a bare minimum. Now, if you look for a flat in Y, you take the target area, right? Because you're looking for this move to be a wave A. You need a three-wave, there we go again, right? We need a three-wave structure in a wave B and a five-wave move down in C. So, and this is the interesting thing, gotta love Elliott waves. You need a three-wave structure in both of the flats, but depending on the size of the structures, you know if you're looking for a Y or if you're looking for a bigger flat. That's the difference, right? But in both cases, you need a three-wave structure. At the moment, this is just a straight line to the upside. If you move all the way up here, right, and this is just your first structure, doesn't make sense to think about a wave Y, because your B, right, is just a straight line up, hitting the common target for a wave B without any three-wave retracement, right? It's much better to see this, and then you be like, okay, wave Y, potential flat, A, B, and then look down for C, taking out this low. If we just keep moving up, hit this area, reject, the probabilities increase to still look for higher prices and move to the box at a later stage for the bigger flat. And then A, B, and then look for a wave C, where this is WXY, as explained earlier, right? So the structure to the upside it makes a big difference in the probabilities. I have a summary in the probabilities in case you're a little bit confused here, but just to get to the point, if we analyze the 50-minute time frame, you can see, and we still have to do the bullish scenario, by the way, but these three scenarios lead to price still moving down. The lowest probability is a zigzag. The higher probability is the WXY and the flat, right? The purple line and the yellow line. The difference between purple and yellow is this move here. Do you get a three-wave hitting the target area for a flat in wave Y, right? Or do you get a bigger 5, 3, 5 for a bigger flat? That's the difference between the two. But in both cases, you are eventually still looking for price to then move down. Of course, your wave Y target, an internal flat target ABC, is this low, while for a bigger flat, your target is these lows, right? So you expect lower prices. So that is the confluence in between these scenarios, I suppose, right? And hopefully you also understood why, as I woke up in the morning and price was falling here and slowly moving up, right? Why this move down had a higher probability to be corrective based on this structure here on the chart, right? Even you didn't even really need to move up. This was already higher probability corrective anyway. And hopefully you then understood why the probabilities were higher for price to take out this high. Little side note, if you are looking for a C, 1, 2, and then down, of course you also hit the 886. Did we take the high already? No, not yet. But if you take a Fibonacci from the high to the low, and you toggle on the 886, price has also touched the 886. Rare for a wave 2, common for B or X, increasing probabilities. Any move down is corrective and not impulsive for a wave C. Increasing probabilities to still take the high. Okay, your bullish scenario, right, is in reference to the 1 hour bullish scenario shown earlier, is where you have to count this as a wave 1. So here you then have your 1 2 1 2 1 2 3 and then 4 5 4 5 or 4 5 4 5 4 5 here, right? That has to be your wave 1 in that case. But then your 2 is finishing here. Same as wave A in a flat. A, B, C. Your wave A is now your 2. After then a W, X, and then a wave Y here. Right? It has to be complex. Can't really be anything else. And then after this 2, if we want to be impulsive already from this low and be very bullish, you need to count some 1 2s. So you then have your 1 in blue, 2 in blue, 1 in white, 2 in white, continuation. So you're now looking at a multi 1 2. Oops. And what you can also see in this case is that your white wave 2 here is very long in price and also in time. This Y2 is your lowest degree Elliott wave count on the chart. 1 2 1 2 1 2 up. Your first 1 2 generally is the biggest one, which is green, and then you have the blue, and then you have the white. And the white, as it's the latest 1 2, preferably is your shortest. It's not a must, but it's definitely most common. In this case, this wave 2 is a lot bigger than the blue 2, so it does impact probabilities negatively. Again, it's not an invalidation. You didn't take the low, and you didn't hit the 886, by the way. But it's not really what you enjoyed to see. But it's not invalidated. And what you want to see here, if bullish, is a straight line up. Because here you're basically looking for your 1 and 2 and 1 2 1 2 and maybe another 1 2, but you just want a strong amount of volume. This area of resistance shouldn't hold, right? Maybe hit it, bit of resistance, and boom, right? It's not like you're not really looking for a very clear, nice 3-wave structure. You just want volume to come in and basically push through resistance like peanuts, right? So that is the difference with the flat scenarios, where in the flat you want to see a very nice, clear 3-wave structure. And basically in the bullish scenario, you look for more impulsivity and more of a straight line up. Right? Remember the analysis that I gave here on Wednesday, where we were talking about the potential of a straight line, right? You want something like this, but then poof, right? Going through resistance, volume increasing, that sort of stuff. But then you're looking for a wave 3 to the upside, and eventually some 4s and 5s. So you get a big wave 3 and then 4 5 4 5 4 5, because there's 3 1 2s. So you also want 3 4 5s to come. Which means that if price does push up, the most interesting fib to put on your chart is a 0.618, taken from this low to wherever then the high is going to be made, because your next range is then highest probability counted as a wave 4, and the 618 is an invalidation for a wave 4. Actually got a comment about that, I think a few days ago. Officially, it's not an invalidation. But in 20 years, Kennedy has never seen a wave 4 move to the 618. Neither have I in my time. So the 618, it's so incredibly ridiculously rare you're ever going to see a wave for touching the 618 and like being valid. You might as well just try and count something else. The only potential exception to the rule would be a triangle that ends below or above the 618, but a wave A touches the 618, but even that is very uncommon, very rare as well. So it's, you know, generally if the 618 is touched, just look for something else, because pretty much everything else has higher probabilities than looking for a wave 4. So this is the 15-minute time frame bullish scenario. Again, the summary is coming soon. Now, from a CVD standpoint, the bullish CVDs played out as price locally moved towards the upside, which of course is great. And also here we have this bullish CVD. It will play out if price it takes out this high over here, right? We have some bullish CVD here also played out, but this high, you can see we have a bearish CVD here on the chart, right? So a bearish CVD as price here moved towards the upside. But then that bearish CVD gets countered by the bullish one. Most recent CVDs are always the most interesting one. And then you move up with low time frame bullish CVDs as well, right? So very much something to consider. And if we then finally, after 36 minutes, one of the longest videos ever on my channel, I promised you it was going to be a technical, theoretical. Maybe you just went straight to the probabilities here instead of checking all the analysis, which is absolutely no problem, because I even recommended it in case you don't want to go into the nitty gritty. It is very educational, but with regards to, quite simply, the probabilities here, then I actually only talk about the 50-minute time frame. So let me first go to the daily and add this to the probabilities. On a daily time frame, we are looking for a wave 4 and then a wave 5, right, to take out this high. The moment we take out all-time high here and we move impulsively in a 5, your bearish scenario is going to be 1, 2, 3, 4, 5 in blue, finished bear market next. Bullish scenario is looking for, of course, another 4, 5, just as a side note, okay? Now, so highest probabilities is still to look for price to move up, but preferably your 4 takes a longer period of time, as per the explanation in the video. 1 hour time frame, the highest probability is either your zigzag or your flat compared to an impulse. This is your flat, this is your zigzag, this is your impulse. Impulse, at the moment, lowest probabilities, also because of the daily, right, where you actually want a longer wave 4. So at the moment, this is what it is. And therefore, with these two scenarios, we are looking for the range to continue, right? Now, with a zigzag, that would mean sticking around here, A, B, C, and then look for price to move down. While with the flat, you preferably, again, also, right, we spoke about the 50-minute time frame. So that's a sub-degree of your X here. And then another move to the upside. So the wave structure between the zigzag and the flat is quite similar, right? Because as messy as my chart looks now, preferably you're still looking for a 3-wave structure, and then you get a move up to either finish your B, well, both Bs, either the yellow B or the blue B. And then we get to the 15-minute, which is basically what's written here. Okay. So on the 15-minute time frame, a local impulsive move down, which was this one here. The moment I wrote this, I wrote it to silver a little bit earlier when price was still down here. That's when I was like typing. So as the local impulse down doesn't look great, especially with a market structure change now. It was coming because of the move up here. Probabilities increased. The local move down was corrective, as also per the analysis of this structure, increasing probabilities to take out the 96.9K high. Right? In general, all the scenarios that I covered here, zigzag, WXY, and the flat, look for lower prices at a later stage and a continuation of the daily range, wave 4. Right? Also mentioned yesterday, but I just did it as well. The only bullish scenario is a multi-1-2, which is this one. But you can see how big the white wave 2 is compared to the blue wave 2, while the blue wave 2 is a higher degree wave 2 compared to the white wave 2, which is a lower degree wave 2. It's not an invalidation, but it's not great, right? It does impact the probabilities. So in order of probabilities, the highest probability on the number one spot here on the 15-minute time frame would be the flat, this is a yellow line, or purple, the WXY, with then a internal flat in Y, right? That's currently the higher probability scenario in the 15, depending on local price action, because we need a three-wave structure, right? And that's also what I write here. That's already explained. This move down doesn't count as a nice impulse. Need a three-wave structure up, not a straight line, right? You need a three-waver in both of the flats and not this. And then on the number two spot, you have the multi-1-2, then you want to see a straight line to the upside, right? So that's nice, because from a trader's perspective, and I am in a long because of also this analysis, from a trading perspective, the probabilities were highest for price to move up. And eventually it would be nice to take the high, of course, but that's all risk management and trade management and all that stuff. So yeah, very nice. Multi-1-2, you're also looking for the high, but of course just continuation. And then on the third spot is the zigzag, where you look for 5, 3, and then 5, or actually 5, 3, and then 5 to the downside, which is the lowest probability scenario. Now, generally, continue ranging on the higher time frame with most scenarios, still looking for moves down at some stage. So probabilities are highest to continue ranging, right? On the higher time frame, there's a daily time frame looking for our wave 4. On the 1 hour time frame, probabilities are also still higher to continue ranging. And then we look for that for another move down, right? So either in the flat, A, B, C, or a bigger zigzag as well on the 1 hour time frame. Keep an eye on areas with additional resistance or support, as explained in the analysis as well. Area of resistance, bit of support over here, but then we have two more additional areas of support. The one in the middle, not sure if I mentioned this, 92.9, 93.4K. Right. And keep an eye on the local price action, a three-waver versus a straight line. That is what matters a lot over here. So in summary, daily time frame, bullish. We continue looking for price to move into all-time highs at a later stage. On the 1 hour, probabilities are higher to continue a bigger sideways range. We have the flat, we have the zigzag, right? Depends a bit on local price action, but in both of the cases, the best, the confluence is locally to look for that WXY or that flat, right? And then get another move up to finish either yellow B or go for the blue B. So it's a similar price movement, if you know what I mean. And then on the 15-minute time frame, probabilities are also highest. You're not yet finished, right? And you're still looking for a bigger sideways range to then move towards the upside. The impulsive structures are counted. We keep an eye on them. We know when the probabilities change. If this turns into a straight line, then okay, we might want to consider impulsive continuation. But at the moment, it's not the highest probability based on the Elliott wave analysis. So yeah, that is a very, very long video. And one of the longest ever, 43 minutes. But you can see the style of this video was quite different. A lot of detail, a lot of nitty gritty. Some people will love it. Some people just go straight to the probabilities, which is no problem. That's why I have them in my video. But hopefully you found it educational, valuable, helpful, all the good stuff. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.